Legends. So this is going to be a video on the weekly outlook for the week of 3rd March 2025. And the reason I'm making this is just to see what I'm looking for in the upcoming week. So first, this is the order we're going to go in. We're going to take a look at ES first. This S&P 500, this NASDAQ 100, this is crude oil, and finally our favorite, gold. So let's get into ES first of all. Let's go to the monthly chart. And monthly chart doesn't really make sense. We got these equal highs here, well, relative equal highs, but for now, probably not worry about them, because remember, if something doesn't make sense, you gotta go down in time frames, right? So these are monthly highs and lows. Let's go to the weekly. Weekly, we are rejected off of this fair value gap right here, and we are expected to move to the upside somewhere over here. And I'm going to explain why as we go down time frames. So let's go ahead and see why. And I only have one indicator on my chart, that's the Lux Algo fair value gap. So deleting all this, let's take a look again to why we are going to be expecting what we are going to be expecting. So right, so this is all-time highs, right? I'm gonna make it somewhere over here because this high here, we took all these highs, so there's really no point in thinking about the upside, right? And below, we traded into this daily fair value gap, and we're rejecting off of this, and this is a rejection candle because, as you can see, it went down below and rejected and went above. Let's go down another time frame. I like to use the 8-hour chart rather than the 4-hour chart. It's similar, but somewhere between the daily and the 4-hour chart. So here you can see we are delivering off of this fair value gap, and as you can see, the bodies really do not want to be in this fair value gap. And before this candle closed, you would have probably seen a bearish candle all the way down here. So this would have been bearish candle somewhere along this, but what matters is the candle closure, and the candle close above here, creating an inversion fair value gap. Well, if there is an inversion fair value gap or not, we're going to find that out in Sunday's open, because we're probably expected to open a little gap down or gap below. So this is where we're going to open, and the immediate down liquidity should be this high, but in the intermediate to longer term, when I say longer term, I mean over the course of the week, we probably work towards these highs, right? And yeah, I think that's it for S&P 500. And let's take a look at NASDAQ now. So let me remove everything. So monthly chart is similar to this. We're delivering off of this monthly fair value gap, but at the same time, we did not take these highs. So before heading up, maybe we want to grab some liquidity and go higher. And why do you think we'll go higher? Because we took this monthly low. Let's go to the weekly chart and see the body closed above this, almost above the 50% of this fair value gap. So even above the 75%, more like 80%, right? So this should be the next DOL. Let's go down a time frame, and you see this extremely skinny fair value gap. We closed within that. Every time before we visited this fair value gap, because we visited this 1, 2, 3, and almost 4 times, right? Every time we failed to push above because there was just a lot of liquidity required to move up there, right? And the reason we went lower is after we grab this liquidity, we want to go down, grab this liquidity, all these lows, and went above. And you can see this is a rejection candle. I'm going to make a video on rejection candle and respect candles over time, but for now, this is all we need to know. So the nearest drawn liquidity, where is it going to be? Next candle, we're expecting the candle to be formed here in this area. Why? Because it just rejected off of this after grabbing liquidity. So next step, go down a time frame. Oh, what do we see here? We took these lows, and these lows. So this was the low we took. We didn't take the extreme low because at this point, we did not take these lows and went above. We took the internal high, we did not take the external high. So this is still bullish, right? So we dipped into the daily fair value gap. This was an inverse, but when it was not respected, this inversion I'm talking about. And there's this fair value gap which we never visited because there's some fair value gaps that always stay open, like this one right here, this one right here, this one right here. You know, so there's a lot of these ones, right? And so we expect the next candle to form here because take a look at this, right? We grab the liquidity from here. What's this? So this for 24.77, and the low of this candle is going to be 24.60. So because 17 points below that, and we bounce back above, right? Let's go to the 8-hour chart and see what happens here, right? So this candle closed above the fair value gap. We did not want to go inside. This one, we went, let's see what the 50% of this range was going to be. So we went just below 50% and we bounced right back aggressively, and we closed right back, right? But we went and touched right the 50%. Maybe let's take a look at the low. It's 484.25, and this is 482.75. So about 2 points, right? So we come here, touch these lows once again. Oh fuck. Yeah, touch these lows once again and bounce above aggressively, right? So the next candle is expected to form here. Well, even though it is expected to form here, this is an inversion fair value gap. So right here. Oh no. So what's going to happen? We are going to escape this. Let's say the open is slightly below, right? Because we're bearish. Even if it's below right here, right? I'm going to draw both ways, right? So I'm going to go here, go above, maybe give another tap, and then work towards any of these highs. Which highs? Which highs am I talking about? This is the zone I'm looking for, first and foremost, right? And this is considering we open above. Let's say we open gap down, right? We're going to escape, come back, escape, come back again, because one visit to the bearish fair value gap is not enough, right? We need at least 2 visits. You're going to see this in any time frame and every time frame. Sorry about that. So this next down liquidity on the monthly time frame is going to be this. Next down liquidity on the daily time frame is going to be these relative equal highs. After, of course, we may take it all this area, maybe leave, tap this bullish fair value gap again, leave, visit, come back after we inverse this, and then go back again, right? That's it for Nasdaq. Let's take a look at CL. I don't really trade crude oil or gold, so I'm not really well versed with ideas, but let's see how it's gonna work. Right, so I'm gonna hide the chart so it doesn't really we are the order flow is simply bearish right now. We're delivering off of this fair value gap on a smaller time frame. You can't exactly see this, but if there's 2 candles, goes up and mitigates it right back, that's a fair value gap. So let's go down 1 time frame. You do see there's an inversion fair value gap right here, but it's not as clear, so let's delete this for now, right? So it's been working towards these relative equal lows first of all, and there's these relative equal lows right here. So it's been working towards that, just doesn't have enough strength to go down there. Now let's see what the fair value gaps are. On the weekly chart, it doesn't really look extremely beautiful, but at the same time, there's an inversion fair value gap right here. So what I'm expecting is, but this is the weekly chart, so let's go to the daily chart, see what happens. On the daily chart, these aren't relevant for now. These relative equal lows is what is relevant, right? So daily chart, what do we see? We are escaping, delivering, we're going far away from this bearish fair value gap. We did not take this highs. We did not take these highs, so that means we're not interested in going that way. So when this candle closes, you know that this high is protected and we should be looking for shorts. And there's a displacement down there in this fair value gap, as you can see. We come back here and then we go lower again, but at the same time we are rejecting off of this from this area. So on a lower time frame, there's probably a fair value gap or something which is pushing it up here, right? So let's try to see if we can find something along those lines. There's one here, there's one here, probably some